Are you ready, Ski Daddy? It's the lightning round, Kramer's man, buddy.
What is up, guys? My name is Ignas. Welcome back to the channel. I hope that you are familiar with the lightning round on Mad Money hosted by Jim Cramer. So Cramer picked a call from a caller who is bullish on First Solar. In his opinion, the Biden's infrastructure plan would be of great benefit. So this is how it went.
In yesterday's Wall Street Journal, First Solar's CEO, Mark Widmer, that's ticker symbol FSLR, is highly confident that Washington will have his company's back regarding the upcoming infrastructure bill.
Well, you know, I have my Apple Watch, and literally a second ago, they ran a New York Times story about how the president is going to not support China from being dropping some solar panels here because of religious freedom. So I think you're in great shape. I think that stock's going to move up.
It is a bit tough to distinguish what Cramer is actually saying, but his call is to buy the stock because it will likely move up. The show was recorded on the 23rd of June, and up until today the stock is doing quite good. So last week on Wednesday the share price closed at $80.19, and in less than a week it is up over 15%, with the share price currently being at $82.20. So Cramer was quite right to be backing the stock, but I want to check if there could be better opportunities in the solar industry. With that in mind, for the comparison today we have First Solar, ticker symbol FSLR, Canadian Solar, CSIQ, and Jinko Solar, ticker JKS. In order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, forward price to earnings ratio, annual revenue growth, price to sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and cash per share. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. First factor we have are the analysts' price targets. As investors, we want to find how far the current share price is away from the average target of analysts. If the current price is under the average target, we will consider the stock as undervalued, and in the end, the company with share price is furthest away from the average analyst target to the lower side gets a point for this factor. For First Solar, we have 14 price targets of analysts. They range from the lows of 41 to the highs of $125 per share. The average is at $85.26, and the current share price is at $92.14. This means that the current price needs to go down for 7.5% in order to reach the average target of analysts. For Canadian Solar, we have 7 price targets of analysts. They range from the lows of 42 to the highs of $58 per share. The average is at $49.43, and the current share price is at $45.71. This means that there is around 8.1% room for the current price to reach the average target of analysts. For Jinko Solar, we have 10 price targets of analysts. They range from the lows of 12 to the highs of $61 per share. The average is at $38.69, and the current share price is at $54.70. This means that the current price is up 29.3% over the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, Canadian Solar gets the first point. Second factor is the forward price to earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. It is the standard price to earnings calculation with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price to earnings ratio gets a point for this factor. First Solar has a forward price to earnings at 27.92. Forward price to earnings for Canadian Solar is at 13.33. And Jinko Solar has a forward price to earnings at 14.17. Forward price to earnings ratios are in the table, and with the lowest value, Canadian Solar gets another point. Third factor is the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. We have annual revenues for First Solar, and going into 2018 there was a decrease to $2.24 billion. Then into 2019 we had an increase to 3.06 billion, and going into 2020 there was another decrease to $2.71 billion. So with one increase and two decreases in annual revenues, we get a sum of 1. Revenues for Canadian Solar, and going into 2018 there was an increase to $3.74 billion US. Then into 2019 we had a decrease to $3.2 billion, and going into 2020 there was an increase to $3.48 billion. So with two increases and one decrease in annual revenues, we get a sum of 2. Revenues for Jinko Solar, and going into 2018 there was a decrease to $25 billion US. Then into 2019 we had an increase to 29.75 billion, and going into 2020 there was another increase to $35.13 billion. So with one decrease and two increases in annual revenues, we get a sum of 2. Results for the annual revenue growth factor are in the table, and with sums of 2, both Canadian Solar and Jinko Solar each gets a point. For factors, the price to sales ratio. It is calculated by taking the company's market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. First Solar has a price to sales at 3.28. Price to sales for Canadian Solar is at 0.73, and Jinko Solar has a price to sales at 0.08. Price to sales ratios are in the table, and with the lowest value, Jinko Solar gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. First Solar has a return on equity at 9.52%. Return on equity for Canadian Solar is at 2.94%. And Jinko Solar has a return on equity at 2.33%. Return on equity percentages are in the table, and with the highest value, First Solar gets the first point. Sixth factor are the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts, so earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for First Solar, and Q2 of 2020 beat expectations, Q3 beat, Q4 missed expectations, and Q1 of 2021 beat. So with 3 beats and 1 miss in quarterly earnings, we get a sum of 3. Earnings for Canadian Solar, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 missed. So with 3 beats and 1 miss in quarterly earnings, we again get a sum of 3. Earnings for Jinko Solar, and Q2 of 2020 beat expectations, Q3 beat, Q4 missed expectations, and Q1 of 2021 beat. So with 3 beats and 1 miss in quarterly earnings, we again get a sum of 3. Results for the last 4 quarterly earnings factor are in the table, and with equal sums of 3, no company is assigned a point for it. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they are actually being leveraged. So in the end, the stock with the highest current ratio under 3 gets a point for this factor. First Solar has a current ratio at 4.69. Current ratio for Canadian Solar is at 1.14, and Jinko Solar has a current ratio at 1.07. Current ratios are in the table, and with the highest value under 3, Canadian Solar gets another point. The last factor is the cash per share ratio. It is calculated by taking the total amount of cash and dividing it by the shares outstanding. Cash per share shows the company's ability to reinvest and expand, but also to buy back shares or pay dividends. So in the end, the highest cash per share ratio gets a point for this factor. For First Solar, the cash per share is at 14.44. Cash per share for Canadian Solar is at 16.39, and Jinko Solar has a cash per share at 143.7. Cash per share results are in the table, and with the highest value, Jinko Solar gets 1 more point. We can calculate the results, so First Solar has 1 point, Canadian Solar 4, and Jinko Solar 3. This means that with 4 points, Canadian Solar is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that that thumbs up, it helps the channel a lot. Now there's a question for you, are you buying any of the solar stocks yourself? Share your best picks or best gains in a comment below. If you are interested to know exactly when I buy or sell in a stock, then consider the options on Patreon. Last week we were looking for opportunities in the gold industry with a comparison of Kinross Gold, Royal Gold and B2 Gold. And we also have 44 weeks worth of investing with the public stock portfolio update. If you are interested in any of these, then click on the video currently on the screen. And that was it from my side, thank you for watching and I will be seeing y'all in the next one.